2011, which is a very important aspect when the country was struggling for the capital inflows. So we need to put into context how it will drive of the informal remittances thriving. We are not very sure about that, but we are skeptical whether the informal remittance may still come in, though the remittance still flow but not in the formal way.
Okay, so you're saying basically a lot of it will move to the black market.
Maybe.
Paramita, if I could add, India has a very natural and cultural appetite for gold. I think it's going to be difficult to contain the demand for gold. What really would happen is the 20% composition of investment demand for gold may probably get pruned, but what about the rest of the 80% of demand? It still remains intact. Intact in the sense, culturally we are so close to gold, I'm bearing testimony to that. But more importantly, I think it's when you know that a condition is given, when a situation is given, how do you convert that so-called unproductive asset into a productive asset? So I think the current thinking back home in India is, how do I monetize this physical saving of gold by creating some monetary transactional kind of feature to it, and make the whole asset productive.
Because the whole challenge is, if he's not able to control this, we go back to a huge current account deficit, we go back to the issue of the fiscal deficit, and we are back to the starting point. So this was a nutshell. Did this budget, with his measures, has he been able to do enough in India? But the question is, after this budget, now the sense I want to get is there a case for me as an investor sitting here in Dubai to actually go ahead and park greater funds? Do I A, have more instruments available at my disposal? B, am I likely to get better returns? Shubhala, let me start with you.
I'll start with my home bank. We offer 7% interest rate on the savings account. Back home we call it savings account. I think in the region you call it no-frill account. Savings is no-frill. That's not what we mean. It's 7% interest rate. If you allow that taxable income of 10,000, on interest on savings, it tantamounts to saying about 9.5% interest on your savings account. I think which part of the world, tell me now, given the current interest rate scenario, gives you those kind of returns?
Important issue is implementation. The roadmap has been laid on, but implementation and execution of those policies which can generate more confidence. The investor doesn't have confidence in India at this stage.
So he's taken some steps. I'm glad you brought that up. For instance, simplification in the procedures as far as KYC norms are concerned. He's mentioned a number of measures, making it easier for FIIs, and if you want to set up, participatory notes. Mr. Agarwal, you would know that.
I think the single biggest message which FM has given is India is open for business. India welcomes FDI, India welcomes foreign investment, and India will do necessary steps, starting with all those small measures, to roll out a red carpet for the investors.
I think it's a matter of time, what measures he has announced. Once people see those getting implemented, probably the Q2 FY14 or maybe early 15, when these things are being seen as implemented, more confidence and more better. So if not FY14 beginning, and we'll do well.
Right, because is there, he has made a case. Okay, now we've discussed fund flows, we've discussed coal. The other thing, the other big issue is in terms of our manufacturing sector, which has been slipping. And in this budget, he's announced a lot of SOPs for you, if you want to set up companies in India. For instance, investments of over 100 crores will allow you a 15% rebate in terms of deductions on those investments. So, lot of SOPs for SMEs as well, but yet we haven't seen that kind of demand coming in. True, he's announced a lot of these measures in the budget, but this is a government which has been trying to set out a big story about trying to get investors to come in and set up shop in India. What's the biggest reason why they don't do it?
Lack of confidence again. I think it's just somebody has to make a big thing. Like Abu Dhabi Sovereign Fund has promised Commerce Minister Mr. Anand Sharma a big investment in India. Once a couple of such things happen, there will be a B string, because India is the place to invest. I don't think there's any the choice for the investor globally.
Is the investor ready to trust India? after this budget, how many of you are ready to invest more in India?
As an NRI crusader since last 65 years in this part of the world, what I am trying to tell is the government is very sincere, but the facilities, the laws, the rules and regulations which are issued by Delhi, sometimes it doesn't reach to the provinces, to the state. If it reach, they don't read it. If they read it, they don't implement it. So we have a lot of problems in the investment because of either the lack of cooperation, and even the scheme like a gold scheme, gold means good scheme.
Right.
Afterwards the bureaucrats make if and but, yes and no, subject to, unsubject to, under the circumstances, all the companies.
I get your point, sir. Investors on this side are saying that we just don't know if we should believe what the FM is saying, whether or not he will walk the talk. There'll be a new government coming in place, but there are economists, and you have Mr. Agarwal here, who is telling you that no, listen, he is trying to change the rules of the game and it will get easier for you. Now, the proof of the pudding lies in the eating. Now, India is also talking about holding IPOs of some of its public sector banks, public sector companies. You know, that is the family silver. And we've seen the kind of returns that those IPOs are likely to generate. The government is betting big. Is there a case for you as investors? You're sitting on huge amount of funds. You're thinking of where can I get those returns? For them to actually go ahead and invest in some of these primary issues which are likely to come out. Mr. Agarwal, do you think there is enough sentiment which is building up for some of these IPOs to go through successfully, especially of the public sector units that the FM is talking about?
Yeah, definitely. In past also, all IPO, all open for sale, issued by the PSUs is quite successful, and though sentiments are positive, still you see in 1980, if you see the entire broader picture, in 1980 Sensex was 100. Today it is around 18,900, 189 times in 32 years, giving a compounded return of more than 15% per annum. So growth is very much there in India, and equity classes is giving much better return than all other asset classes. So you can calculate, even if you invested in 1980 100 rupees in share market, it is now 18,900, simply in index, I am telling it to you.
Right. Okay.
You can always do it much better. So there is a very positive perception in India, and worldwide global recession was there, and still India is making good progress. GDP is still 5%, it's not bad, and they will definitely achieve 8%. So time to come, India will back in their growth.
Okay, final questions. After this budget and after this has been announced, you've been through the frying pan. Mr. Bangat, what are you advising your clients in terms of their investment in India? Are you asking them to increase their investments, and if so, in which asset classes?
See, if you look at from a remittance perspective, the 60% of the flow or the money that goes in gets into the household expenditure. The 20% gets into the bank deposits, and the 10% gets into investments in real estates or equity markets and those kind of things. And as Subhudha was mentioning, after the deregulation of the interest rates on NR deposits, bank deposits have been a very important
so
source.
that trend you're saying is likely to stay?
It will increase because 2-3 reasons. If you read between lines in the budget, there has been some announcements for the a woman bank, all woman bank. This is something
Right.
which is very interesting from a remittance perspective, because most of the beneficiaries who receives money are largely women, because those are the bachelors out here. And you see there is an announcement of putting up ATMs in all public sector bank branches. These things will increase the number of people onto the banking net, and
Right.
we will see that increased amount of remittances getting into the banks, and
Okay.
which we have already seen since the deregulation of the interest rates happened.
Okay, okay. So basically you feel that there is a lot which is interesting in the budget. Very quickly, Gaurav, and you know this as a news editor, keep it crisp, keep it short. What's the message that you got out of the budget?
It was a good budget in terms of the constraints under which he had to present the budget. But much of it is riding on especially the revenue generation on two things. One is, of course, the
So do you believe him?
sale of PSU stakes and the telecom,
Yeah.
those two. I'm not too sure on that count.
You're
I
in
mean,
between,
kind of-
50-50.
it's much assumptions have been made to be.
Now, from DGCX perspective, we are going to expand on the India story which we have had. We are going to very soon launch S&P BSE Sensex on Dubai. We have already announced plans to launch our flanking products for INR futures, that is mini INR. So we are definitely going to enhance our story. I couldn't agree more with Bharat Bhai saying if it is difficult to do business in India, then we will bring India to the doorstep of UAE.
Okay. Mr. Bhutani?
I think I agree. It's a matter of time. India is coming up and it will come up, and what FM has set as targets are all achievable. 4.8. India is the third fastest growing economy as per World Bank estimates, and following China and Indonesia, I think, and World Bank says that India will overtake Indonesia next year.
So you are also a believer in this story. Okay. Ms. Agarwal, we've just heard from you. Shubhada, final words from you.
You've held restraint, showed patience over the last couple of years. Show it for one more year. India is at the point of inflection. It is turning around for better.
Okay, great. Thank you so much, my panelists, for joining us. And now we're going to discuss something I know all of you would love to discuss. We'll ask the next round of panelists to join us on board, and that's going to be on the taxes front.
You are aware, we are the youngest commercial bank in India, 8 years old. We do not yet have an international presence, but that does not mean that we do not allow others to participate in our growth story. And that's exactly what we plan to do. We appreciate the role of Indian diaspora in India's growth story. And keeping that in mind, I think we have, what we've done is we've devised the savings products at the outset, which through virtual banking, through a phone, since we do not have a branch, through phone or internet, we would allow the Indian non-residents to basically, avail of much higher return of interest as compared to the others, and actually have a cushion against inflation. We are very keen to raise our forays into other avenues. We await the central bank approvals, necessary approvals, to start our branch or rep office, whatever format it comes into. But needless to say that it would not just then be restricted to retail banking, but even the corporate banking products could be devised by us through our offices in the region whenever we get a go-ahead signal from the Reserve Bank of India.
This is a good provision which he has brought in, and let us appreciate. I mean, the finance minister is taking very genuine steps, and let all NRI community, they should back him by those people who believe that rupee is going to appreciate, they must subscribe to this bond.
India's fourth largest private sector bank, providing superior interest rates and the finest banking experience for NRIs. Your support inspires us to do better. Don't miss out on the opportunity. Contact Yes Bank today.
Before you realize, your loved ones will grow. What about your money? For incredible investment opportunities, talk to SMC. Moneywise, be wise.
Trade precious metals, currencies and energy futures in the first and largest derivatives exchange in the region. Trade the unique Indian rupee futures contract and hedge your price risk. Trade gold futures on a regulated and secure platform. Regulated by Securities and Commodities Authority in the UAE. Dubai Gold and Commodities Exchange. Liquid markets and tight spreads. Superior transaction speed. Wider range of trading and clearing services. Emerging market access for the global market. Global market access for regional investors. DGCX. Right time, right place. India's fourth largest private sector bank, providing superior interest rates and the finest banking experience for NRIs. Your support inspires us to do better. Don't miss out on the opportunity. Contact Yes Bank today.
Before you realize, your loved ones will grow. What about your money? For incredible investment opportunities, talk to SMC. Moneywise, be wise.
India's fourth largest private sector bank, providing superior interest rates and the finest banking experience for NRIs. Your support inspires us to do better. Don't miss out on the opportunity. Contact Yes Bank today.
I have my next round of panelists to please join us on stage. Mr. Dr. Ram Baksani, Mr. K.V. Ramamurthy, Mr. Samir Kanabar, Mr. D.K. Agarwal, Mr. Sethuraman and Dr. Narayanan T. Ramachandranas. Mr. Chidambaram has said that I am trying to give you certainty as far as the tax regime is concerned. The DTC is also in abeyance at this point, but he's clearly indicated that they are moving forward on that front. So there is some sort of stability. The message he's trying to send out is, listen, we are trying to change that aspect. Mr. Kanabar and Mr. Sethuram, Mr. Kanabar, actually let me come to you. Do you believe that investors should start reorienting themselves and believing in the long-term structure in terms of some of these taxes which have been imposed?
So, I mean, and as you rightly said, the two big ticket things which he is banking on is direct tax code and GST. And what tactfully he has done is that the previous finance minister was promoting GST by dictatorship. He was saying that we will draft GST, let states accept it. What he has done, he has turned the table around. He is saying that you as states draft something, give it to me. If I feel okay, I'll sign off. Let's proceed. So he has now started getting buy-in of each state, because to get GST you need 3/4 of the majority voting to get a constitutional amendment. So he has turned the table around. He is telling, yes, you draft. He has put his people in the team. He has formed a committee. His people are sitting there, Sushil Modi, etc. They are driving it. And I am hopeful that once this happens, I think it will be a really big door opener for investments coming to India. Same thing is happening on direct tax code. He has clearly announced in this budget session, direct tax code is coming in. And he said it will not be the same as you are seeing the way it is drafted. It will be a totally different new tax code. He doesn't want the existing code just to be renamed as direct tax code. He wants something new.
Because, Mr. Baksani, let me come to you. Last year when we were talking, the biggest issue was GAR. GAR in this budget, he's saying 2016 is the timeline. TRC, oops, I didn't read what I wasn't able to, I made a mistake there. He quickly retracted the TRC being enough of a clause for overseas investors to come in. What does that do for an investor like yourself? When you have a GAR which happened in the previous budget, a quick retraction on the TRC.
This is exactly NRIs are looking for. I mean, there has to be some consistency. Now, in the present budget, there's not even a single mention of NRIs, as if for the country they don't exist. And what they have mentioned, that finance minister has created an instrument to invest in rupee denominated bonds. Now, okay, as Mr. Ramamurthy said, this is a very safe investment. There's no doubt about it. But in last 2 years we have seen rupee has depreciated by about 20%. Now you pay 9.5% per year and lose 10% by way of depreciation. What sort of investment is that?
Mr. Agarwal, would you like to counter that?
Yes. See, there was a provision where in last budget, the finance minister at that time, he had given a 5% taxation rate on the dollar-denominated infrastructure bonds. So he had only extended this benefit to a rupee-denominated bond, because some people, even here in the audience, they might be having a feeling that Indian rupee is going to appreciate. And if that is the case, I think it makes a good case. People who believe that Indian rupee is going to appreciate, and if they have a taxation rate of only 5%, why not to put money into a rupee-denominated bond?
So the dollar-denominated option is still there?
It's still there. That has not been taken away. So what I say, this is a good provision which he has brought in, and let us appreciate. I mean, the finance minister is taking very genuine steps, and let all NRI community, they should back him by, those people who believe that rupee is going to appreciate, they must subscribe to these bonds.
So Agarwal has just clarified that, dollar-denominated option is there, but the rupee-denominated he's added on. So then you as an investor have both options.
And Pavita, I would also like to add, this is my personal observation. I believe that Indian rupee, which is trading at 55 as of now, will meet in the next budget also. My sense is, the way this finance minister is creating a very conducive atmosphere for attracting foreign money, lot of FII money, lot of FDI money, lot of NRI money is going to come to India, and Indian markets are going to do very well, and rupee is going to appreciate maybe to the level of 48. Maybe to the level of 48.
Right, so because that would have impacted us even further, including the currency, if that had not happened. Yes.
One point which budget provisions contain is that inflation-adjusted bonds are announced.
Yes,
in fact,
that's right.
I think that's a good bet for any investor, whether it is a domestic investor or an NRI investor. When your investment is going to be guarded against the inflation, and especially rate of interest, again I am telling you, the moment inflation comes down, I think interest rates are bound to come down, in fact.
Absolutely.
I think we need to be on the watch out, and there are good number of options available for even NRIs where they can hedge, in fact. I think that depreciation which is being really, if they can afford to hedge that risk, in fact, they can make substantial money on it.
Mr. Kanabat, let me come to you. How do I now as an investor prepare for GAR, given the fact that it's going to be happening in 2016, and given the fact that many NRIs are setting up offshore and have set up offshore units? So how do I prepare, how do I react given this timeline? And also on the issue of TRC, which many NRIs have asked in fact for some sort of leniency, and there was expectation that he would actually make it easier for NRIs.
So let's take up the question in two parts. One is, of course, the TRC part, will come to it separately, but the most important is anti-avoidance rules. And Indian revenue authorities are really agitated the way some of the treaties which India has signed, especially India-Mauritius, through where the entire funds are being channeled. So what tactfully he has done is two measures. One is that he has introduced a buyback distribution tax, which net means that if Indian company were to pay dividend to a Mauritius company, it would pay it in the form of buyback of shares. So it will buy back the shares and distribute the surplus, which would not suffer any tax in India. Second, what he has done is that he came out with this aspect of ghost in the name of TRC, and as one of the panel member earlier said, the market tanked. One single reason for market tanking was TRC, and he had to do a quick act to call a quick press conference and then convey the message that the intention was not to do away the Mauritius Treaty. We will respect the Mauritius Treaty. However, there are certain sources of income which could be in the name of royalty, fees for technical services, etc., where we want to test that whether a beneficial owner is indeed a beneficial owner and hence availing lower tax rate or not.
So basically the message coming out is, as NRI investors, eventually I will have to start paying more tax, whether it is on my equity investments, because I would be an overseas investor, and if I am going to be, once DTC comes into effect, please be prepared. And it is only an equitable arrangement, that given the fact that domestic investors are also taxed.
Yeah, and he's given you 2 years for that.
He's given you 2 years to adjust to that. So I think that is a fair roadmap that he's given. Okay, very quickly, because we're completely running out of time, and I know everyone's stomach is grumbling, but real estate, we know it's an important conduit for investment. He's done a lot for the medium and for the lower category of investments. Now, as far as real estate is concerned, let me start with you and Mr. Baksani. The thing is that he's also introduced a TDS on all transactions above 50 lakhs.
50 lakhs.
Again, so he is bringing more and more transactions under the tax net. But he's also giving you SOPs for middle to low income level home loans that you have taken. So how does that change the profile for NRI investors? What's the sense amongst all members?
I think what he has done is very, very fair. Just 1% TDS on amount above 50 lakhs is quite reasonable.
Right. Kanaba, do you agree?
No, I would put it a bit differently. And all of us noticed that he made a very clear statement, only 42,800 above 1 crore taxpayers. I mean, by any means, it is not a number. The difference in India is that maybe, yes, people are not earning income, but people have accumulated wealth in whatever form and shape. So what he's trying to do is tax wealth under the Income Tax Act by introducing this 1%.
But it makes my procedure more cumbersome because...
Yeah, I mean, but ultimately you have to see that what nation deserves, is it getting, and whether the pain or administrative hurdle is a larger concern. And I think if as a nation, if we are only admitting that we have only 42,800 above 1 crore taxpayers is something which is absurd, which cannot be accepted, and hence this kind of tax is legitimate from an economic and from a nation perspective.
Okay. I'm going to bring in my guest who's representing Amity today. Health and education as an outlay has received greater outlays, which it does every budget. But how does that translate for an investor? Whether it's for you, who is where you're pursuing private education within the country or outside. Was there anything specifically in the budget? And for entrepreneurs who are looking to enter this field?
As far as our Amity Education Group is concerned, it is a not-for-profit education sector. So insofar as the budget perspective from a non-profit higher education group is concerned, we see that a substantial investment is made, one, in vocational training, two, SOPs for institutions that offer vocational training, three is a substantial investment in the area of elementary education through Sarva Shiksha Abhiman, and also to support the children midday meal schemes.
Right.
Now what happens is these children now will grow up and get into the higher education sector. The gap there is now we need to see some more funding such that these children will get into the higher education sector.
So that's where private sector needs to come in?
Yes, a kind of partnership or incentives for institutions such as us,
right,
which are non-profit in character, will require. It may be in terms of infrastructure support, it may be in terms of subsidies, it may be in terms of parking certain education cess into non-profit higher education sector. And also there is a lot of regional interests within India. We have been having visitors in Dubai from different governments, state governments in India, trying to replicate the models that are there in the UAE to strengthen the education system based on earlier Knowledge Commission reports in terms of lack of universities, the number of universities considering the number of turnaround
right,
of students and so on.
Okay.
So we see that there is tremendous opportunities in terms of investments in higher education sector in India.
Okay, the discussion has been around the nitty-gritties in the budget, and I think we've brought up some of the important points. We'd like to conclude the discussion at this point. Perhaps, there's still many areas we haven't covered, but a forum like this cannot always cover many areas. We've tried to go in as in-depth as possible, but really to give you the message, and I think we are hearing two different messages that, there is at one level there is the perception, at the other level there is the details that one should go into to really understand what the finance minister is trying to do, and hopefully next year, this time when we address you again, we will see an Indian economy which is back on a much firmer footing, and some of those investments that you've planned in India actually deliver better than expected returns if we were to go by what some of our panelists are telling us. With that, thank you so much for joining us again this year, and we'll meet you again next year. Good night.
India's fourth largest private sector bank providing superior interest rates. and the finest banking experience for NRIs. Your support inspires us to do better. Don't miss out on the opportunity. Contact Yes Bank today.